Hello, good evening, everyone. Welcome to this week update on Dxy and all other instruments. So it's important that we critically discuss this so as to know what next we expect from this market. So we are starting with Dxy. I'd giving you my own bias that this looks like a wave 1 and a wave 2, and of the B wave saying this as a possible W to the upside, and we are seeing the development of this wave. You may call this one an X to the downside, then A, B, C of the Y leg to the upside, which we are still expecting now. But this B of the Y leg is what we are talking about now. And if you want to call it, you may still say that the one in the middle, it's the B wave, which is a triad. If this is a W here, we can say that this is an A, B, and a C of the B wave before we see the other leg to the upside. Now, this looks incomplete. Looking at the structure that we have here, forming a lower low here, and we said this is an A structure, sorry, a 1, a 2, and that we had finished the third wave. Now, we are taught that this fourth wave, breaking the micro 4, this is the daily time frame, please. You have to know at what time frame I'm doing this analysis. So this is the micro fourth wave of the third wave, the fourth wave of the fourth structure of the third wave, which finished its fifth here. Then we had thought that this is going to develop into a zigzag of an A, B, C to finish the fourth wave, something that at least as bigger as this, before it goes down one more time to break the low, then before we now see the completion of the Y led to the upside. Now, when we see this, so that it connotes that there's a slight, the weakness in the dollar by the NFP now connotes that there is a slight change in structure. And that is what I can see here. And what structure are we likely to see now? I'm seeing this as still an A, and this now looks like a B wave with a sharp move. And with the way this thing wants to close now, it's closing after the first sharp movement to the downside, and with the kind of recovery or retracement of the A wave that it did, the fifth wave, if this had completed a fourth wave, and this will not be the fifth wave. In terms of structure, this looks incomplete for the fourth wave. Looking at the magnitude of the second wave that we experienced here, so this is not complete for the fourth wave. So this may be giving us a potential in the making a potential extended flat in the making, but we're going to see to that. We're going to see to that. So this is the B wave developing in between here. This is an A, and we are seeing a more complex structure that is trying to unfold. So when we see this kind of movement, then we should be anticipating a more complex structure, which again, we might expect that it's going to give us an A of B, B of B to the upside, and the C of B to break low here. So if you see, and this might be an A of B, a B of B, without breaking this top, then we go to break, I think we are likely going to break the low first before anything. And the rejection here also supports that the B wave is developing as an A, a B, and a C of B, and the C of B, we might expect it to take the low of here, and if it takes the low, it might extend probably to anything between the vicinity of 123 to 161.8 without breaking 161.8. So if that happens, then we can target a buy on DXY to break this top as an A, B, and a C. And then after that move, so that means for me, for you on this DXY, allow DXY to grow weak again to break, and you can look for some strength in the dollar to complete an extended flat. And after that, we're not going to finish the fifth wave to the downside, which will break more lower. Then we'll now see the move of the Y structure to the upside. That is what I'm anticipating here now. So I'm anticipating that this is going to break low now. So with that said, the other thing is that if this keeps going to the upside, if it keeps going to the upside, to break this top first, then we may just look for a drop to the downside before we see that move. And that might change the structure more. But I don't see that happening with this structure I'm looking at. I'm seeing a B wave in the making to give us a more complex structure. So what we should wait for this to break the low and look for a short buy at this to give us an extended flat before we come down again. So with that said, if you take that to the euro dollar, if we take that to the euro dollar, so we are seeing this as an A structure. This is an A structure. Then we should look for these to give us a more complex correction to the upside. If you are in a sell from this level that I gave on Friday, you should just close your sell immediately the market opens. I see this go up again. It may break the top or not. It may break the top or not. It may just go up. And once we get a setup, maybe above these levels, we are going to grow above this level. We should be expecting, it might give us a regular flat. It might give us a zigzag. It might still give us a zigzag, but we should wait for this to complete its move, its correction to the upside. It may break the top again. So if it breaks the top and it rehearts, if it rehearts at 1, 2, 3, it may just come down as a running flat. Then we should look for that reaction and sell that reaction as a running flat. And if it's going to give us an extended flat, whatever it's going to give us in terms of structure, we should just be looking at how to complete the B wave. It's going to be more complex. We shouldn't buy. We should just allow the market to decide what it wants to do with this wave. If it's going to give us, as a running flat or extended flat or as a zigzag, whatever it's going to give us, then we should take the sell to the downside. It's only running flat that will not take the low. It's only running flat that will not take the low. But if it's going to come as an extended flat or a zigzag or a regular flat, it's going to take the low. And from there, we're not going to look for the buy to finish the fifth wave, then before looking for the big wave to the downside. So that is what I can see from here. Let's allow this to come, finish itself. Don't sell now. Close your sell. Allow it to go up. Give us a clear signal to sell, to break this low. Then we can take another buy. So that's what I can see. Now on NZD USD, so what do I expect here? On NZD USD, this has given us a more complex reaction. we don't want to be caught losing position. This had come down. This could be a more complex correction, and this is going this may just try to continue to go to the downside. We don't want to risk it. It doesn't look like something that is going to give me the fourth wave. I think it's more if it's going to, is either it goes and give us an ABC, and when we get a buy, we'll pick a buy to go more to the upside. And that is what we should anticipate here. If we have been in a buy from this level of the NZD USD, and this is a sharp move, a correction. This is another sharp move, which is different from the DXY and the euro dollar here. So what we should expect is that these may correct to the upside immediately. This may correct to the upside immediately to complete the B structure we are seeing here. It may correct to the upside. If it corrects to the upside immediately, I think we should just relinquish our position. If we are buying, let's relinquish that position and let's see another drop. From that drop, after that drop, we may now be thinking of buying. But if it goes down, pulls more down, I will still want to sell from there. I will allow it to still go up because this is a sharp move. It may just, still burn off to the downside before correcting. So at the correction around this area, once we get our exit, we should exit our buy. We should exit our buy. Then allow price to fall one more time before we look for a buy again. So that is how to plan here in the coming week. So you can watch this video over and over to see what you may likely get on the DXY, euro dollar, and the NZD USD. So on gold, what do we expect on gold? On gold, what I expect on gold now, gold is giving us a more complex structure. It's giving us a more complex structure on the daily. If we go to the 4-hour time frame to look at what we may be getting on gold. So there are two scenarios that we can plug onto on gold. Two scenarios, whichever play itself first. So we are seeing these as trying to develop a more complex structure, around this area where we had this move and this move and this move to the downside. So it's developing as a more complex structure here now. So if that is what it is, and it's going to give us a W, X, and more complex structure here, what we should expect now, we should expect that this, if we are being a buy, this may continue to go up. And if it goes up to break the top, then we should be looking to exit at where I gave at 25.49, 25.50 area. Then we should pick a sell from there. But if it corrects to the upside and not break to the top, and if it corrects and drops again, then we should allow it to drop and take this low here. If it should take this low here, then we should look for a buy from the low. So those are the two scenarios I can see gold. It can go up all the way. If it goes up first to take 25.50, then we should sell from there. But if it goes down to break the low, the one I favor that I want to see gold do is to go up a bit, break down one more time, gather liquidity, and take us up. So that is what I'm expecting here. So if it goes up, continue to crawl up. Once it takes the top, just be looking for your exit at 25.49 area. But if it crawls up without breaking the top and it falls, it could fall down one more time. It could break the low one more time. at that point, we should be looking at counting this internal structure here. We should be looking at this area. Then it's going to change. The area of, you should be looking for your buy should be around that area. You should be looking for your buy in that vicinity, around the area of between 2465 and 2447. So that's what we can hope to get and go up to take the top again. So with that, I've come to the end of today's weekly update. See you during the week. Bye.